Yeah, what's up, everybody? Good morning. Welcome to the morning show. I'm Spencer Israel here with JC Parets and I think Steve Strazza. Strazza joining us from JC's house. So we have JC, we have Steve from different rooms in the same house. Should be weird, but whatever. We'll go with the flow. Okay, a lot going on today. We have to talk about a regime change, the regime change. That's what we're talking about today, the regime change in the market. We got some earnings. Maybe we'll talk about shorting bonds like a certain hedge fund manager did last night. I don't know. Our guest today is a good one, surprise guest. Evan, the intern, our intern. Evan is joining us here in about a half hour. It'll be fun. He came prepared. He has charts. He's ready. You're ready. What's up, Ken, Steven, Jason, C. Marie, Ravi? Good morning, everyone in the chat. Let's go.
All right, Strazza in the house, back in the United States for a whole week now. For the record, Spencer, Strazza's not at my house. He is at a hotel.
He doesn't let me around his family.
Oh.
We're going to Alexandra's soccer practice today. You're coming to soccer practice.
Wait,
we don't have to go to
stay in a hotel?
No, I can't wait to go to Alexandra's soccer practice. Yeah, dude, I'm at a hotel, and it's great. I feel like I'm living in a mansion here. It's like the size of an apartment. I got a kitchenette. Got a living room.
You know why? Because it's one of those like hotels, like by corporate offices. You know what I'm saying?
Extended stay.
Extended stay. Yes, that's the word. See, somebody learned a thing or two about hotels over the last few weeks, huh?
And this Wi-Fi should work too. I don't want to jinx it, but paid like the extra $5 for the business Wi-Fi. Which is
big time, big spender, spender.
You did, but hey, it's working so far.
Don't even let Steve stay in his house. That's so much. All right.
I mean, he could, but it's going to be way more comfortable at the extended stay. He's not going to have screaming kids in the middle of the night. I mean, I'm doing him the favor here. Trust me.
No smoke alarm here, Ken. Yeah, we're good.
A little bit of a regime change that we've seen over the last month, continuing to infiltrate the market. Last night was our live monthly charts strategy session. Strazza conveniently in the air on the leaving Florida on the way up here to the Northeast for a couple of days. Missed it completely. I gather you didn't even watch it.
How am I going to watch it? No, I didn't watch it.
Strazza could probably give that presentation with his eyes closed without even knowing what I said.
I will be rewatching. I always rewatch them. I fell behind on your stuff when I was out in Asia. And it felt so good to come back and read a couple of your posts and just see you talking about the exact same thing.
Well, I've written about this in the past. In this case, you were out there for work and you were doing market stuff, but like the whole like get out of town, go to Mexico and poison yourself with tequila and like all this stuff. Like there's something to be said for that because I've had these experiences and then I get back, you start looking at your charts with a fresh, open mind. As long as you have the ability to do that. If you're going to be one of these perma people, not you specifically, but just in general, if you're going to be one of these perma people, that ain't ever going to work because you're just going to go back and you're like, oh my God, the crash and the gold and whatever it is that they.
It's nice. Like it forces you to kind of take a step back, right? Yeah. Zoom out, chill out a little bit. It's not healthy to be at your desk all day, every day, 7 days a week.
So we're going to be so healthy, Spencer, that Strazza and I are going to play golf today and tomorrow because for our health, to get away from the screens,
But seriously, we do this every now and then, a couple times a year where we get together, we just mash our heads together, hang out, brainstorm, and good stuff always comes of it, whether we're sitting at a bar or a restaurant or at a Starbucks. I think the last time we did it was like the Money Show, and that's Stock Market Media happened shortly after that.
I mean, listen, we are clearly something that we've been doing over the years is working. Here we are, right? Things are pretty good, and they're on the up and up, right? Things are working. So why don't we get a little state of the market there, Spencer? What do you say?
Yeah, I mean, JC and Strazza put their heads together, and 10 years later, I don't know. I was going to make some pejorative thing, but I don't know.
We decided to bring on Spencer Israel.
Well, no, I was going to say 10 years later, the machines have taken over, and everyone's run by AI. AI rules the world. I don't know.
To be fair, Strazza was like, "What do we need Spencer for? Don't we have Giancarlo already?" Yeah, you didn't know Spencer yet. Come on.
Oh my God, I was very bullish Spencer from the start.
Okay, fine. When you met him, though,
don't flatter me.
That was when you met him.
Don't flatter me.
I knew Spencer. I knew exactly who Spencer was.
Yeah, I don't know. Am I throwing Strazza under the bus?
Yeah, because it's not true what you're saying. I will say, I just had a lovely conversation with my mother this morning, who I haven't talked to in way too long, and she had the nicest things to say about how good Spencer is and killing it on the show and how
Strazza's mom's got the hots for Spencer.
He's got such a lovely personality. And I said, Ma, you're right. Spencer's great. We're so
This is too much. Where's the abuse? All right, state of the markets.
Good egg. All right, let's get right into it. The stock market's been absolutely ripping. You had the best 6 months, best first half to the NASDAQ in history. The sell side analyst community missed it completely. The economists are still waiting for a recession. A lot of the talking heads and whatnot just have got everything completely wrong. And for some reason, people are surprised that the stock market has been doing so well when this is exactly the time that the stock market is supposed to do well after midterm elections. First couple of quarters of the pre-election year is the best time of the entire 4-year cycle. And Strazza, what do you know? Stocks did great at exactly the time that they were supposed to. So like if you're confused or you're talking to someone and they're confused as to why stocks are doing so well, it's only because they haven't studied history. In fact, if the stock market wasn't doing so well, that would be unusual, right? That would be weird. So stocks are doing exactly what they're supposed to do when they're supposed to do it. And now is seasonally a weak few months, Strazza, and we've already started to see some regime change over the last month or so. It doesn't mean that the market's going to crash. It doesn't mean it's the end of bull market or the Powell or, the end of the world. Go to cash, buy gold and guns and ammunition. Like, it's not what that means. It just means that perhaps we see some churning in the S&P 500, some rotation into sectors that have a smaller weighting, right? You feel me on that, Strazza?
It's really the word that comes to mind for me is this would be like a lull, right?
A lull. Yeah, that's the word I use, a lull. I can't even spell lull.
It's Lull, a temporary interval of activity. It's a lull.
Are you reading a definition of lull?
Yeah.
Oh, I was going to say.
But that's the big question, right? Like you're talking about, the seasonal trend up until now has been spot on. Does it stay spot on? Because that means sideways, at least for the indexes.
Go to the next chart so you can zoom out a little bit. I don't remember a presidential cycle that has tracked seasonals this well ever in my entire career. Going up when it's supposed to, going down when it's supposed to, going sideways when it's supposed to. It's like, damn, these things are good.
I mean, it called 2022 too, right? Like
called them all, right? The seasonal cycle has absolutely market absolutely nailed it. So nevertheless, even though this lull, as Strazza put it well, actually, I think, is really just a few months, August, September, October. And then to quote the great philosopher, Jeffrey Hirsch, right? Buy in October and get yourself sober. And you buy it into the whip into the end of the year, as you can see there. And the election years tend to do very well into those elections as well. So, for me, I'm looking for this rotation. I have more cash on the books than I've had in a long time. A lot of cash. Started going to cash a couple Fridays ago when I was still at the beach. Strazza, I forget where he was, somewhere in Asia. But I was at the beach. It was a Friday. Started raising cash. Started raising more cash this week. I've got a little bit of energy. I shouldn't say a little bit of energy. I got some energy. A little bit of healthcare, and then I got starting to nibble a little bit on this crypto, see if it goes. Looking to add to positions, but it's really the weak dollar. The weak dollar. The weak dollar is what got us here. Throw the dollar chart in here. This is the one that is messing everything up for the bulls. If you're bullish stocks in an environment where Spencer puts black squares on the screen, you're going to have a hard time understanding what the dollar's doing, right, Spencer? So there's the dollar. Look at those lows all year. We broke down below those lows last month, and then the squeeze is on. And as we've learned over many, many years, from failed moves come fast moves, my friends, in the opposite direction. And that's precisely what we've seen. So if the dollar index is above that 101, 102, 101 and a half, sort of that range that we outlined here, I think stocks in general are going to have a hard time going higher. The people who have bet on this negative correlation ending at any point in the last 6-7 years have paid the consequences. I know, because I've been betting consistently that the dollar index is going to remain negatively correlated with equities. And I've had a lot of people fight me on that over the last few years. And the price is the ultimate arbiter. And the market continues to prove not so much that I'm right. I was right in trusting the trend, proving that the correlation is still there. Like, you can bet all of a sudden that the dollar is going to rip and stocks are going to go up too. I ain't making that bet. Are you making that bet, Strazza?
No, not at all. I think the dollar, once again, is kind of reasserting itself as one of the most important charts out there, particularly as it relates to risk assets. And just to kind of expand on your last point about seasonality, what a year Mr. Jeff Hirsch has had. I mean, kudos to him. Really just killed it. I was with Jeff in Orlando in October of last year, and I made him write that in my book, Buy in October and Get Yourself Sober.
Nice.
Little did we know it. It was Halloween. We were about 2 weeks in to the new bull market, at least at the index level, because the index bottomed on October 13th. So, great.
Shout out Jeff Hirsch. Let's get him back on the show. So we know that the rising dollar is not good for stocks. For me, the interest rate conversation, the bond conversation, is less about risk on, risk off, and more about sector rotation. Why don't you throw up the technology and TLT chart so you could really see what I'm talking about here. So the technology trade, particularly last year, was just an extension of the bond trade. It was just another bond trade. As interest rates were going down, technology stocks were doing great, right? Bonds were going up, tech stocks are going up. And then a funny thing happened. Interest rates started to perk up, bonds started getting hit, and the stock market got absolutely destroyed, right? Particularly technology and growth. And then notice how since the fourth quarter last year, technology stocks have done so well. Bonds have not.
What a decoupling. These charts looked almost identical at a point last year, even into November, December of last year, right? Do we have an overlay?
Well, I mean, we're looking.
Overlay them. Yeah. You could see where it really came undone late in the fourth quarter of last year.
Late in the fourth quarter, and then you can even say it kind of stuck it through the end of last year, and then this year it's just been a dud, right? Tech is ripped, and then bonds have rolled over. So the question is, okay, who's got it right, the stock market or the bond market? It doesn't necessarily need to be the bond market. You know how they always say that the bond market's always right. That's not the case at all. The bond market can be right. In this case, we were wondering, and it seems like I think the bond market's got it right, Strazza.
For right now, like the short term, maybe, but tech stocks ran all the way back to their old highs with the bond market looking this way. So weren't tech stocks right all year? They're both right.
Right, exactly. Well, technically they're both right, always, right? Throw up slide 7 there, because I think that tells an interesting story. This is just technology on its own, slide 7. XLK.
If you were waiting for bonds to confirm the price action in growth or tech, you missed the whole thing because it never happened.
Throw up slide 7 there. It's technology. There it is. And we're running into those former highs. So you're looking at 175 on the XLK. That's the big level, guys. That's the big level. And if we're below 175, by the way, we are, it's a tough long. And it doesn't mean the market needs to crash. It doesn't even mean that the market needs to go down. It just means that technology has got some work to do, and it just so happens that technology is almost a third of the entire S&P 500. So if technology is having a hard time going up, I think the major indexes are going to have a hard time going up as well. It doesn't necessarily mean they need to crash, but have a hard time going up. And from a seasonality standpoint, Doesn't that make perfect sense? So pull up slide 11. I think this is a big theme that we've been talking about here. I added to my energy positions yesterday, as a matter of fact. Slide 11, Spencer.
They aren't numbered. I don't know why
Yes,
they
are.
aren't.
What do you mean they're not numbered? Of course they're numbered. I'm literally looking at slide 11. It's right in front of me.
Oh,
it's energy versus technology.
I'm on it now. I'm on it now. No,
they all have numbers.
I mean, no. Show me where the number is. See a number on here.
They're all numbered. Energy versus technology. So energy was a monster off the lows, right? Absolute monster. Crude oil traded below zero. That was it. Energy ripped from there. So outperforming everything, especially technology, right? As interest rates were ripping, technology stocks got crushed. Energy did well. Energy is one of those sectors that tends to do well in rising rate environments. So as you know, Strazza, my favorite topping patterns are those that are not tops at all.
That's one.
But actually consolidations near the lower end of the range. And if that's what this is, and technology starts to underperform energy, so in other words, as this line's going up, that means energy is outperforming technology. Seems to me like a pretty good time for that to happen. Tech underperforming, and then energy, which is 0% of the NASDAQ and only 4% of the S&P 500. If energy is the leader, and these energy stocks could triple, and they're not going to make a dent on the indexes.
Yep. Would you say energy is the group that you're most interested in adding exposure to right now?
Like this very second, like right now, this
Today.
moment? Yes. But looking forward a bit, I have the most anxiety about missing a ripper in crypto if Bitcoin starts to get above 30, 31, where this is what's going to buy me my beach house, Strazza. I'm thinking about it. Like, the beach house is expensive as hell, man. I mean, we like the bougiest. Of course, we want a house in the most expensive part of the Jersey Shore. So it ain't cheap. I think the crypto trade is going to get me my house, and I don't want to miss it. I'm telling you. You think I'm joking, but you know for a fact I'm not joking.
I know you're not, and I'm so rooting for you. I want the beach house too.
Right, because we all get the beach house. Like, we all get to enjoy it. Spencer gets to take a little drive down to the beach. Right. Strazza flies into Atlantic City, takes a nice little Uber down to the crib. Like, we have a nice little time. Like, we're all rooting for this to happen.
You're gonna need some juice for the beach house. You're gonna need some juice.
Yeah, I'm gonna need some juice.
You're not gonna do it with staple stocks.
We're not getting there. This is the 2 to 100 club is where we're looking for something like this, right, Spencer? Are you looking forward to coming to hang out at the beach house?
I was gonna say HSBC ain't buying the beach house.
HSBC is not gonna get me there either.
Also, the beach house is that's also my retirement dream.
I'm not trying to retire, bro. I'm trying to buy a house next summer. I'm trying to retire.
I'm trying to buy a house.
Spencer, you're not retiring. What are you talking about?
No. I meant, retire to the beach house.
You're a big part of the morning show. Didn't you hear Strazza's mom is a big fan of Spencer Israel?
Did you see the chat this morning? They love you, dude. You're not retiring. You're not going anywhere.
Yeah, you're not going anywhere. You're stuck with us now.
Now
you can't leave.
Spencer, now that JC is here, why don't you make the argument you were making to me about HSBC, Tim? Like, Spencer made some great points about HSBC.
I don't know it anymore. I'm out.
Are you? Oh my god! Win with this guy.
This guy. No, it wasn't an argument. It was just
good point.
Don't forget to look at the y-axis, right? Because the chart looks good, looks great, but it kind of what'd you make? $4 on that thing?
Yeah,
$3.
But I own the calls. We got the calls cheap as hell. We bought the 40 calls when it was at 38. Yeah, it was like 100% return. Is that below your line?
I'm not trying to, pour cold water on your trade. It was a good trade. I was just for perspective. The y-axis gives you perspective, right? Is all I'm saying.
You're preaching to the choir, baby. I love when Spencer talks to me about the y-axis. Give me more. Preach, baby.
That was my point. I
think the question becomes, JC, would you have been interested in putting that trade on in common?
For my personal objectives and time horizons, no. For the
5%.
Slow pace that Spencer was alluding to, it's just not my style. Like, if I were perhaps older, maybe more conservative, right? But for me, we were buying out of the money calls because they were cheap as hell. Volatility was making new 52-week lows. I got journalists telling me about a banking crisis, and this bank's making new 52-week highs. So I was like, whoa. And then when Sean was like, dude, these things are only $2. I'm like, really? All right, let's go.
So
it worked.
The thing trades like Procter & Gamble. I think if you're ever wondering why some of these big banks overseas trade like regulated utilities, it's because they really are regulated utilities. There's no beta in these big banks anymore, and I think that's coming to the U.S. too.
Yeah, but this is a good lesson that you don't need to buy penny stocks to get the juice. You could be in the options market in real companies, and you can get just as much juice.
I mean, there are only a handful of things that I love as much as derivatives. There's like soy sauce, champagne.
Soy sauce? Not the sushi, the soy sauce?
Soy sauce is amazing, dude.
Oh my God.
Like, it is such a special sauce. And then
what you're dipping in the soy sauce. What about that? No?
Yeah, that's fantastic too. But soy sauce is just like one of God's greatest inventions.
I can't with you.
Fantastic. And you would have to throw derivatives into that same conversation.
Strazza loves derivatives. Well, I mean, it creates a great vehicle for investors that look at something like HSBC. And I'm like, dude, watching HSBC is like watching paint dry, right? Like it's like watching grass grow, right? It's the most boring thing ever. Procter & Gamble, like Strazza said. But when you add a little juice, now you got a good trade on your hands, and that worked out very nicely for us.
Let's take this question real quick. JC, how do you define cheap for options?
Well, we look at the implied volatility.
First
of all, I like to just generally know where volatility is. So we'll look at the VIX, right? And we know the VIX has been super low until recently, right? So we know volatility in general. It's a low volatility regime. Mm-hmm. So when we're in a low volatility regime, we tend to find a lot of individual stocks with implied volatility very low. Also, those exceptions, of course, particularly around earnings and things like that. But we look at the implied volatility in the individual stock or the ETF. Of itself over time. So it's where's implied volatility in the stock at the time relative to where it's been over the last 6 to 12 months.
Right. So we're literally looking at a time series of implied vol, and if that line is towards the lower bounds of its range, it's historically cheap. Simple as that.
Right. So in a scenario like that, we're gonna apply our strategies that are good for low volatility environments. So like for example, we're not going to put on a bull cost spread. We're not going to sell naked puts because we're not getting paid to do those things. We're going to employ our low volatility strategies. One of my favorite low volatility strategies is just to buy out of the money calls because they're so cheap and you go out as far as possible. This was in the spring. We were going out to January, February with some of these options. We were going out super far. Back in the day, like a year and a half ago, we were buying Chevron calls 2 years out because volatility was so cheap, and we're still in those. They don't expire until next year. So, and this is a trade we put on a year and a half ago. When I say low volatility, go out as far as possible. Like I'm not kidding. Like literally, go out as far as possible.
Yeah. In hindsight, we probably should have put on a whole lot more leaps this time last year.
Well, yeah, of course. Well, yeah, in hindsight, yeah, sure. Yeah. Well, what are you going to do?
Sushi is just a way to eat more soy sauce.
I can't even with you. Can we? I got 2 more charts for state of the market. Can you just throw in there slide 12 there?
All right. I've been troubleshooting Fonz's slides on the fly. Fonz, bring yours up. Let's go. Let's see how this
slide
works.
12. There it is, slide 12. So here we're looking at ExxonMobil. For the record, crude oil got cut in half. ExxonMobil broke out and is holding that breakout. Like, that's very impressive. Like, very impressive. Energy as a sector hasn't even broken out yet. Exxon has, but Chevron is the big winner. And I'm not just talking our book because it was a successful trade. Go to the next chart there. Not just because it was a successful trade we put on, because that trade that we put on a year and a half ago has nothing to do with now, right? These are new trades, new parameters, new volatility regime, all of those things. And I've been adding to positions against 150 on the Chevron. I bought more of that dip yesterday. So my biggest position is in energy. So if people are like, oh, JC, you're only talking your book. It's like, well, I don't know who else's book to talk. Like, I could probably tell you some of the things Strazza's in, some of the crap that Spencer's got in his portfolio that's legacy from before he joined us. Like, I can tell you stuff about that, but I can only talk my book. I can only tell you what I'm doing and what I'm seeing. Like this Ackman guy.
Okay,
Like this Ackman guy is shorting bonds or whatever. Like, what does that have to do with me? Like, I don't know, right?
First of all, thank you. I was just about to bring that point up. Speaking of talking books, why do we have somebody in the chat here telling us everything Bill Ackman's doing? Is this the same Bill Ackman who told us the world was ending when COVID began and the market
crying on TV or something?
Dude, this moron. Give me a break. I'll fade anything this guy does.
Well, I wouldn't call him a moron. Like he has a 10-figure net worth.
Dude, he's one of those guys who abuses his role. Comes on TV and says crazy things, and he's probably doing the opposite because he's ran out of ways to make money, buying all these trashy values.
Doesn't he have a $1 billion net worth?
I would hope so. He made money.
I don't think he's a dummy.
Fading Ackman, fading his public pronouncements has been a good strategy.
But that doesn't mean he's dumb. That means
he himself
advantage of these idiot journalists that put him on and prance him around.
He went on TV and cried, and then went buying like the next day. Right? He went shopping.
Probably. Yep.
It's terrible.
Listen, if he's not doing anything illegal and he's taking advantage of journalists that don't know any better, good for him.
Like I said, he ran out of ways to make money, so he's just using his position.
Well, fine, but that doesn't make him dumb. That makes him smart and creative, does it not?
He's good at PR. Yeah, I guess so. Did he ever have that bicycle race with like Dan Loeb? Remember that thing? They're supposed to like race bikes. No, it's like 2012. These hedge fund managers, they do some funky stuff.
Yeah, that's the trade. When you see tears, you buy. Right? Yeah.
I'll plug the book that I read about Ackman, and it's about the Ackman icon Herbalife feud.
Wapner's book.
Yeah, when Wolves Bite. Very short, very easy read. I read it in like a weekend. It's a good book. If you want.
Big fan of Wapner.
Didn't Carl Icahn just embarrass Bill Ackman all over the place with that trade?
Yes.
He did eventually win. Yeah, because Ackman was basically saying Herbalife was a Ponzi scheme and it was a zero, and it's still around. So
yeah. With all the presentations, like every other day, they're giving a new presentation. Is this guy like? Do you think he'll ever get sick of embarrassing himself in public?
Probably not. I mean, he's getting paid. He's getting a nice 220.
I love Joe's comment.
He's doing fine.
Oh yeah, Joe's got it. Joe's got it right. Ackman, I'm sure, has a beautiful beach house.
Yeah.
I got to get me one of those. Like, I can afford a beach house. I just can't afford the one that I want, right? Like, and the one that I want just happens to be 3 times what my actual house costs. So, I'm not there yet.
All right.
I mean, listen, I could go buy it tomorrow, but I would have to liquidate my entire portfolio. Like, I'm not doing that. Like, I like my portfolios. I need new money. So let's go. Big money, big money, big money.
Big money.
Let's get Evan on. I'll be right back.
All right.
Okay. Oh man.
By the way,
wait.
Bumper.
No, but he's gonna miss it. He's gonna miss the bumper.
That's okay. He'll live.
All right. Here we go. Evan the intern. You ready? Let's go.
Evan the intern.
That's hilarious.
So good.
I love that.
So good. Whose voice is that? Is that like a machine voice?
Me? Oh
no. The Evan the intern. Who said that?
No idea.
That
didn't sound like anybody who works with us.
I have no clue.
That was so good. Evan the intern, about to be a freshman at Virginia Tech. He's always wanted to be a Hokie. Now's your chance. And you got the Virginia Tech shirt on.
I do. I got the polo ready.
Unbelievable. So, Evan, why don't you tell the folks why you're our intern? We could have chosen anybody in this world. We get resumes every single day. Why you? What makes you so special?
Well, I put myself in a good opportunity by going to the 50th annual symposium. And then I happened to run into Sean, and I talked to Giancarlo as well. He's the main guy, who threw my name into your guys' meeting, in talks of having an intern on. And I've also just passed the level 3 exam for the CMT. So
youngest in the world, youngest of all time, I think.
No, close.
No, Li Zhao in Hong Kong.
There's someone out in Asia who was younger. Joel.
Did you meet Li Zhao?
Yes, I did.
Good egg. Good guy.
Yeah, really good.
Super nice guy.
We went out.
Also, Evan's got that Barstool All-Star Charts flag in the back there. We didn't make that. That was a nice touch. I'm pretty sure that's why Strazza's like, yo, we need to hire this kid. How do we not hire this kid?
Yeah, that helped a lot. But no, look, this is exactly the kind of person that we want interning with us. Evan came to everybody and told us how much he loved technical analysis, and we said, okay, this is probably a good place for you then, right?
Also, this is a good lesson because Evan and I spoke on the phone. How long ago did we speak on the phone, Evan?
I think it was last December, maybe 2 years ago.
Had to have been 2 years ago because you hadn't started your CMT process at all.
Right. Yeah, it was 2 years ago.
Somehow you got me on the phone. Kudos to you because I'm a little bit busy. So you got me on the phone and I told you what to do and you actually did it.
Yeah, that's
so I've told a lot of young cats over the years what to do, and then it goes in one ear out the other. You actually did it. You started reading the technical analysis books, right? What did I tell you exactly?
I think you said, there was a bunch, but it was Edwards and McGee, which to be fair, I didn't read because I went immediately into the CMT, and I was like, this is probably pretty similar to level 1. You mentioned.
So you still haven't read Edwards and McGee?
I haven't yet.
Dude, you're fired.
He's fired. Get him out of here.
I can't with you. You haven't read Edwards and McGee?
Not yet. All right, it's on the list.
You got a pair of balls, kid.
One of my slides that I brought today is actually a book list to read.
He brought slides. He brought charts, guys.
Dude, as soon as you get off this video, I want you in that book.
I have to order it. I actually had it. But then there was a kid that I was living with this year who wanted to read it, so I gave it to him. He's in Vegas now.
You got your Edwards and McGee book taken from you?
You can order another copy.
Edwards and McGee book. You know how like running backs like in high school, like the coaches make them hold the football the whole time, so that in the hallways people try to knock it out of their hands. That's how you need to treat the Edwards and McGee book. You need to have it in your hands at all times.
Fair enough.
Can we bring Evan brought some charts. Can we bring those charts up
slide
now?
24. Slide 24.
Slide 24. Okay.
Look at that. Evan's got the numbers down.
All right. Dollar index is obviously the main story. I think if RSI reaches above 60 here, this false breakdown sticks. It probably stays within the range there. And I don't like stocks if that's the case. So slide 25. This is Thrasher's chart. It was from the chart of the chart report, chart of the day the other day, and I liked it as a seasonality thing. I think it's going to be pretty muted second half, and that kind of just adds to the bear case as well. We go to slide 26. We're at overhead supply, so again another confluence point there. And I think all of that makes sense for a pause. And then goes 27. I like this one a lot. I've been dropping this in the chat. It hasn't gotten any recognition whatsoever.
Great chart. Great chart. Take the RSI out of it because you're diluting the value of what you built up top by throwing the RSI. Take the RSI out, clean that up.
Right. But no, equal 80. It's just another way to look at overhead supply, but it's a cool index, modern Dow theory. I like, a lot of talk about that you guys had on several morning shows in the past. And
hold on, SOXX, that's an ETF, right?
I might have just meant to do SOX, then just.
Yeah, do the indexes to keep it right. So like when we're making equally weighted charts, you want to either use all indexes or all ETFs. You see how I'm busting balls already? You see that? But no, but this is good. This is good that you know that. So
honest
it's
mistake.
A great chart, by the way. See Strazza? Look at that. This is a great chart. I mean, the RSI is not necessary, and the components are a little bit off, but your head's in the right place.
That's embarrassing.
It's not. It's a compliment. It's a compliment.
But taking that, so go to slide 28. So taking those 3 data points right there. I bought JP Morgan. It's a tiny green circle. I probably should have made that a little bit better, but I bought it on the breakout. And I just sold it yesterday. It ran into overhead supply and kind of gapped a little lower. And I was like, this all kind of, ease off the pedal a little bit here. So, and I think there's better places to be in. And slide 29. Small caps, they look like they're going to break out. Not much more needs to be said there. Slide 30. And this is, where I want to be heading into, steel and energy. It was in the hot corner yesterday. Strazza, you had the bubble chart of the second half performance and the first half performance, and energy was just in the bottom right, starting to perform better. I should have grabbed that one, but I like that one a lot. And then, so how I'm playing that, small caps breaking out and energy and steel doing pretty well. Tidewater is a small cap energy name. It already broke out from a smaller basis. Now it contracted volatility at the 161.8. So it makes it easier to get into this uptrend. And I like the reward to risk is good enough for me. And I target 75. I could probably get into that today. And then slide 32. This is a small cap steel name. I'm not even sure this is gonna break out for a little bit, but when it does, I'll be in it. And then,
are you aware of the base in this one too? We've already made some good money on this one this year.
No, I'm not aware of it.
You zoom out, this one has a base that goes all the way back to the financial crisis, and it's just hitting target 1 right now.
Oh, damn.
Love this.
Yeah, I'll have to look at that then.
Hold on. Throw up the TDW. This is a great look. Kudos to Evan. The kids these days, they want to bottom fish garbage, but not you. You're looking for strength. The offshore drillers have been the place to be. This is an offshore driller in small cap. What is it, 3 billion, something like that?
Yeah, I think so.
Evan, the intern, coming through with the relative strength. I like where your head is at here in general.
Yeah.
I was a little nitpicky on some of those charts earlier for good reason. Did a hell of a job.
I want to mention, so the way I grab these two charts, this is a scan I run every day. I look for new 52-week highs in the Russell 3000 components relative to the S&P 500. So that's pretty much like the main bottom-up scan that you need. I think if you're looking at that scan and you're paying attention to the market caps and where these stocks actually are that are making new highs, new 52-week highs relative to the S&P 500 on that scan, you can find pretty much any really strong setup like CMC and TDW. So I like both of those. And then, there's the bigger base there. Yeah. A little blurry, but I can still make that out.
Yeah. I don't know what the issue is with these blurry charts. I don't understand.
They've been trying to fix it all week.
I'll tell you what the issue is. I think I've narrowed it down. I think it's because Fonz is he's using Wi-Fi and not Ethernet.
Come on, Fonz.
I think that's the issue.
Yeah.
Hold on. Evan, how old are you, Evan?
I'm a month away from being 20.
Because you're one of those hockey players that's like really old freshman. You're one of those.
I'm not a 3-year out of high school junior hockey player. I did 1 year at juniors. And that was enough for me. So
we used to have freshman year, we would get the hockey players to buy us beer because they were all older.
Yeah, they're all 24 years old by the time they go into freshman year.
Yeah.
I did drop Evan's Twitter handle in the chat if you want to give him a shout out there, and it's on the screen as well.
So Evan, tell us, what has your experience been like this summer? What do we have you for another couple weeks? Seems like you just started.
Yeah, I leave 2 weeks. But
tell us about your experience. How has it been hanging out with the analyst team and helping us out with different things?
Being in the actually seeing everything going on behind the scene and seeing all the chats is that's probably one of the coolest parts because you just pick up on so many. When I took a little step away, I got my wisdom teeth out for a little bit and I didn't really look at too much charts and stuff. But when I was things started to kind of glue together, I felt like I started to understand things a bit more, and you kind of just subconsciously pick up on, different things as you're going through it. And I think that's going to continue to happen a lot more.
What was the biggest thing you learned that you were so surprised about that you didn't realize?
That's a hard one, but I just think that I've gotten a bit more comfortable with the top-down approach. I mentioned that scan, that bottom-up scan that I do, and that's pretty much like before coming here, that's all I would do for like, my analysis. I'd look at that and be like, okay, these are the sectors that are having the strength. But actually like looking at the dollar and looking at foreign currency or foreign stocks and all the current other different currencies and stuff, trying to actually do the hard work, because it's not easy to do the top-down. Like what you guys do or what you're really good at is very difficult, and I don't think that gets enough credit, but I think I've gotten a bit better at it. I definitely am going to continue doing that.
A lot of people don't realize, you make a good point here, and maybe it took us a little while to realize it, or at least put it into practice. JC could speak to it a little bit better, but JC, you started out, this was all top down, and then we added the bottoms up stuff. You don't have to pick one of the two. You can do them both together, right?
Yeah,
I think as we've learned over the years, I think you have to do it the best job possible, because the top down is really, really valuable. It gets you on the right side of the trend, but you're going to miss a lot of stuff underneath the surface by being too top down.
100%.
And if you're only bottoms up, you're going to get a lot of ideas, but you're going to get smacked in the face because of larger trends that you would recognize from the top down. So I think it's complementary. And like Strazza always says, when we come to a conclusion from the top down perspective, and then the bottoms up scans are essentially confirming that and reiterating that, that's really, really powerful.
Totally
agreed.
They are great complements, and a lot of people don't realize that. And it's always fundamentals or technicals. Why not both? Bottoms up or top down? Why not both? There's a really cool quote Joel was saying in Asia. It's an Asian. It's some JC. Do you know it? It's something about It's not or but and. I'll get it. I'm gonna pick it.
You're the one who was in Asia for a month. I don't remember. I haven't been to Asia in a few years. I have kids now. I don't go to Asia. I don't leave my house. Morgan's like, my wife's like, oh, you're just gonna play golf with Strazza the next 2 days? I'm like, yeah. It's like, don't you have to work? I'm like, this is work. We have a lot to talk about.
Morgan loves me. She understands. She would rather see you play golf with me than somebody else, just some random guy.
Yeah, but then she's gonna be like, oh, and then you can have all this work on the weekend. It's like, yeah, I gotta work, right? Gotta pay the bills. Gotta get that beach house. Let's go.
Evan, is the game home this year? So are the Canes going to Virginia Tech? And how do I get student seats? I want to say
the Miami.
Is it in Virginia Tech? Yeah,
they're not playing them this year.
They don't play this year. It's like the first year that I can remember where we don't play Virginia Tech. I don't understand.
All right.
I can get you guys tickets to any other game, though. They're not expensive, but it'd be like you can get like 4 tickets, for like a group of people. I already have season tickets, but
I don't think Blacksburg, Virginia is at the top of Strazza's go-to list after he's like, I'm trying to go back to Vietnam, bro, not Blacksburg, Virginia.
Whatever. All right.
All right, Evan, this is great. Nice job on the charts. I love that Dow theory chart. We're definitely going to start using that. I'm going to get all the credit for it. So.
Good stuff, Evan, as always.
Good job, Evan.
Thank you.
Spencer Israel, what do you say? We bring in Kimmy? See what's cooking.
Yeah, and then before I forget, chat was loving the bumper there. I didn't make that bumper.
I saw it.
I didn't make that. Shout out to Izzy and the guys over there. They made that. They crushed it. That's probably my favorite one, honestly. So that wasn't me. Shout out to those guys. They did amazing. All right, Kimmy's here and she's trading. She's got ideas. She always has ideas. That's what she does. She has ideas. Let's find out what they are.
Kimmy, 3 for 3 yesterday. Have a day, huh? She here? Where is she?
Oh, wait. Oh, what the hell? I had her. Wait, 1 second. Kimmy, you there?
Kimmy.
I'm here.
Sorry, that was my fault. I think that was my fault.
So the Moderna worked. Tesla from the long side. CVS. Nice diversified bunch. And you got a couple of long positions on the VXX. So the VXX is a long volatility position?
Yes. I've been in that a while. I mean, I'm going to hold that for a while. I've been in that a while. I'm still short stuff. I bought the TLTs yesterday. was back to break even at the end of the day. I let the room know, like, you could always sell at break even. I probably should have. It's gapping down. Everything I did yesterday, because the market was so iffy, I bought small on everything. Like, I really traded small yesterday because it's like, okay, are they going to bounce them or continue them lower? And at some point, they just leveled the market off. So, August is usually typically bumpy the first few weeks. Would you agree?
I mean, yeah. I mean, this is seasonally, it's like a weak, low liquidity period, right?
Mm-hmm.
But don't you think that's like a self-fulfilling prophecy? Like, all I've seen the last 3 days or week, all I've seen is a steady diet of, just so you know, August is a weak month, everyone. Watch out for August. It's August.
It's not
and then
self-fulfilling, Spencer, because different investors have different time horizons and risk parameters and objectives. So
Right.
not everybody is doing the same thing for the same reasons at the same time.
Right.
Some people might be, but no.
Feels like I'm being hit over the head with the idea that it's August and
Okay,
stocks go
fine,
down
but
in
they
August.
were also
It's like,
hold on. They were also
literally-
hitting you over the head in the fourth quarter last year that it was seasonally the best time of the year to be buying stocks, and people weren't buying them.
Sorry.
Right.
Anyway.
And then, but it's funny though, like the Fitch downgrade happens like right at August 1st, it's just weird, the timing. So we'll see, we're like in an in-between spot. They're going to push them lower. Are they going to bounce them? It could be like a dead cat bounce. Moderna got walloped in its earnings. Wayfair popping up, but we'll see if it could hold the pop above 78.40. If not, it might drop down into yesterday's high.
Can you walk me through this Qualcomm situation?
It's got to stay below, like, obviously it's not doing well, right? So if it stays below like 119.20, it could drop. Where is it right now? 116.50 or so. Where is it showing? Oh, it keeps treading lower. So it was just like at 117 like 20 minutes ago. So that's the problem about making recommendations in the morning, right? At 7 a.m. because things move. So it's already down another buck. Right. So when you make an idea, it's already down another buck. So I have to see how it goes. We'll see if it drops down even further to the 115 level. If it presses past that, it could head down to like 111.
You're looking for a bounce for a couple points.
Potentially. We'll see.
Yeah.
I'm going to go slower because it's volatile, and I'll see if I play that name or not. We'll see how some of these names do. I'm trying to, Procter & Gamble's holding up, J&J's holding up. I'm going to watch those as well. I got a lot of things I'm watching. It's just whether I react, how I react. And also, I'm going to keep my position size small for me.
I like it. I'm with you on that. I got a lot of cash. I'm small. I'm with you.
Bumpy.
I'm with you, Kimmy.
Like a roller coaster. It's going to be a little dipping for a little bit, maybe.
Nice job yesterday, by the way, as usual.
You. Thanks so much.
That's always a way to also control your risk, is just shrink your size a little bit.
Yes, shrink your size. That's it. Shrink your size. Or like we had some great trades. I tell people like, hey, like if you had 1, 2, or 3 winners and the market's going down, like just stop. You know what I mean? I lured the room, like I got out of like I bought Nike yesterday. It wasn't moving. I made 10 cents on it. I didn't put that in there. I made 10 cents. And I said, guys, I'm getting out. It's not moving. I'm up. You guys, should be break even or up with me too. I'm selling. If you like to sell, you can sell with me. TLT, I said, it's kind of break even. It could gap down. I have it small. I'll give it a shot. It's down. It's against me. I'll see if it could get a bounce back. Maybe I buy it up into the gap and then sell it off. We'll see how it reacts. If not, I'll stop out. I'm just kind of like testing the waters in here.
I love it.
One of the biggest complaints I've ever heard about trading is that it can be a very lonely experience.
Very.
If you don't want to trade by yourself, then you should at very least check out Kimmy's room. It's where she's going right now. She's there every single day, Monday through Friday, if the market's open, trading through the open and into the day. Just talking to her room, talking through the trades, talking through ideas that she takes, ideas she's not taking, and of course, you can follow along with her and trade with her. And the whole idea is to make money while you do it, obviously. So code's on the screen, link is on the screen, link is in the chat, link is in the description. Don't know where else to give it to you. I hit you over the head with it if I could. Kimmy, go get it. All right.
Bye, guys.
Bye, Kimmy.
Bye.
Man, I always like make a plan for the show, and it always goes off the rails, which I don't mind really. But we do have it means we got a lot going on here that we haven't talked about yet. Should we do earnings? We should probably do some earnings here. And
We know
Strazza
you
will be
want to
back
do
in.
earnings.
Well, you can't ignore it. There was like 1,500 earnings reports every day for the next week or two.
How happy does that make you?
It excites me as someone that likes volatility. It excites me. And yeah, I like hearing from companies, even if what they say isn't always true or accurate.
Can we talk about this Wayfair up 10%?
Yeah, so that we can do that. Wayfair was on my list, so let's get the Wayfair chart up here, Fonz, if we can, and I'll read you the numbers on this guy. Let's see, the adjusted EP. Wow, that's a big adjustment there. So I don't know if that EPS does not compare to the estimate, is because it's a huge beat. Sales was more reliable, and that came in higher as well. Unless it is comparable, because the estimate was that they would lose 67 cents per share, but they actually made 21 cents per share. That's a very, very large beat. And yeah, it's up 9.5% right now.
So the bid and the ask is up near 80 or so. Nice breakout there. Gap and go, right? Do I have that right? Yep, gap and go. I mean, the big level for me, it's probably 78, right? 78. If we're above that, that's a gap and go. And for those of you guys who have been around for a long time, when you have these bases, the completion of these bases on a gap higher, sort of jumping over that resistance, is as bullish as it gets. I like having positions against the lows of the day on that gap and go, right? So let it dance a little bit. If you're looking to own it immediately, 78's a good level. Those are the former highs. If we're above 78, I see no reason at all not to be long Wayfair. I've actually never bought anything at Wayfair. They got all kinds of cool stuff that you can buy. Like you can buy like a skee ball machine. You could buy like, I want to get what's the little thing with the shuffleboard? They got all kinds of cool stuff.
Yeah, yeah, it's an online retailer.
Yeah, but like
mostly
cool stuff for like basements and stuff.
Isn't it
furniture?
Yeah. It's like a few grand for like like $5,000, $4,000.
Is it like IKEA, a situation where you have to build everything? Okay.
No.
I don't know.
Oh, they probably have things you need to build, but
yeah.
IKEA's shit. I mean, the stuff that you buy at IKEA is garbage. It's going to break. You don't want to shop at IKEA. I think Wayfair is a higher quality.
Wait, Rachel said she just listened to the Wayfair call. Anything good there, Rachel?
Nerd alert.
Let's do shop. Hey, calls can be fun. Sometimes they can be fun. Let's do Shopify real fast. EPS beat, sales beat, gross merchandise volume up 17% on a year-over-year basis. This was another COVID darling. Where's that shop chart? Come on.
There's that black screen of death that I love so much.
I'm gonna get this worked out. We've been working on it for a while. I'll pull it up on my end.
We're talking about Shopify?
Yeah, why don't you just always pull it up on your end so we don't have to see the black screen of death?
Because it's so much easier. I can multitask when I'm not sharing it, but when I am sharing it, I have to be really more focused on it. Anyway, here's the chart. Basing is the takeaway, obviously.
Since JC's been bragging about his trades the past few days, I'm going to take a moment here and do the same.
Who's bragging about trades? I don't brag about anything. No end zone dances here.
All right. I'll do a little end zone dance. Up over 100% on this stock since.
Ooh, nice.
In at 30 on the failed move, the breakout of that failed breakdown back in October.
Wow. This was not doing anything. And you're saying it was good news, Spencer, theoretically?
Yeah, I mean, yeah, theoretically.
Stock's down on good news after doubling. That's a fade all day.
This company does everything right. This is just a buy and don't overthink it type of a business.
Yeah, I probably want to be short then.
Their revenue is growing at such a consistent clip, like quarter over quarter, year over year. Like it's not like they're going backwards. Some of these businesses are going backwards. They're going forwards, right? I mean,
If this thing's below
great-
67, it's a short.
All right.
If this thing's below
Well,
67, it's a short. It goes down to 54. Retest those levels. Yeah, I don't like this
guess you
at all.
can do that.
I'm long.
Nice trade, Strazza. Love you, but this is not. I'm not buying this.
Wait, what else did we have? Oh yeah, since we already mentioned it, might as well go back to it. We mentioned Qualcomm, right? This was a doozy. Okay, so they missed on the sales, but then they lowered guidance as well. So they came in below estimates on the backward looking numbers and the forward looking numbers. Not what you want to see, and that's why the stock is down.
And if you're a semiconductor stock and you're not beating
10%.
estimates, like you're doing something wrong in this environment, right? Am I wrong?
Yeah, fair. But also, I think just semis in general, if you look at some of the indexes, particularly the equal weighted ones, a lot of good news and a lot of positive earnings have already been priced into these stocks. So like when I think of that analog chart of the, what is it, pre-election year?
Yeah.
And all that sideways action. And then I see semiconductors hitting those former highs. I think this is one of those groups that deserves sideways at this point.
Perhaps. So down 10% this morning, like I said. What's the next one here?
When is Todd Gordon coming back on the show?
Who?
Todd Gordon.
Whenever.
Well, he was on while you were gone.
All right.
We couldn't wait. We couldn't keep everybody from coming on until you got, right? You know what I mean? Like, there's certain like Todd Sohn and Hurley. We're like, okay, wait for Strazza to get back. But we can't do that with everybody or we'd have no guests.
This is a nice base here in Robinhood. For me, it becomes like a situation of, do you want to own Coinbase or Robinhood? Similar situations. Robinhood probably gives you a little bit more diversity outside of crypto. I think they have some cap table issues still.
Same trade, though, Strazza, to your point. They look exactly the same.
And Coinbase looks a little bit better, doesn't it?
Well, Coinbase is not gapping down 8%. So,
yeah, Robinhood's got to break out here. It's got to get
both
this base breakout. Coin broke out, retested in a way. Where is it now? Yeah, Coin is so buyable right here. You know, the mid 80s. You have those pivot highs from January and March. And if you look at a chart, a relative trend, Coin Hood, nice reversal pattern that looks just like the absolute trends in Coin and Hood, shaping up in favor of Coinbase.
What else do we have? Oh yeah, there was Unity, which we can look at if you want. They're down. Oh wow, they've been actually fading this one all morning. It was flat when I looked like an hour or two ago, but now it's down.
What, Unity software?
So
it's flat.
Well, but I'm saying it was up. It was up. Now it's flat, and of course now it's bouncing off the open.
It's up 2%, 2.5%. It's all right. It's
speaking of the open, should probably just take a quick look here at the markets as we start the day. Starting off a little bit in the red across the board. That's okay.
Dow futures down 40 bips, NASDAQ down 65 bips, bonds getting the shit kicked out of them.
Right.
So that's why you're getting that sympathy selling in technology. Interesting bounce out of energy, copper up as well. Natural gas up over 2%. Little bounce on the yen, dollar essentially flat.
These energy charts, some of them are just so set up right now. I will probably be adding more exposure to this space today or tomorrow. I'm talking about the Slumberjays, the Permian Resources looks real good, PR. Maybe we get some of those charts for later, but can we throw up the S&P 500 futures chart and just talk about some really tactical levels here now that, we've had some corrective action?
You have it on the deck? Where is it?
Fonz knows where it is.
What? Do you want like a live chart or just
slide 18?
Oh, okay. Well, let's see how this works. Oh, I got it. There we go. We don't often show futures in our charts.
No, we should do it more. So I can't see it. Okay, there it is. The level is 4,500. You got the pivot highs there from earlier in the summer. The AVWAP is coming in from those June highs. Yeah, it doesn't have today's data, but we're sitting right there. If that level breaks, right, then I think we have to maybe get a little bit concerned, and the August highs come into play, so call it 4,300. But if buyers show up right here at this little VWAP from the June pivot highs, right, it's pretty clean, right at 4,500. This is going to be a buy the dip type of correction, just like all the other ones. I wouldn't imagine we get anything any deeper than that. If 4,500 breaks, look at the base breakout level, which is 4,300 at those August highs.
I think you asked me a good question yesterday. What's it going to take for me to, start getting more aggressively bullish on the indexes again? And I liked my answer, and that's time. We're going to learn a lot. The things you were just saying, I agree with all of that. Maybe they buy the dip, maybe we break down. I don't know, but we're going to need either way. We need some time to go by, right? So that's really where my head is at. This is a good chart. This is a nice little reminder.
We should know whether this 4,500 level is intact and this was a buy the dip type of a correction, or if we're going deeper by the end of the week, by tomorrow. That move should happen. We're either going to rebound or flush right through, and then the August highs come into play.
Well, we're 12 points away from that right now, so yes.
Yeah.
45-12. All right.
I have. I want to just get back to that self-fulfilling prophecy situation that we discussed before. How technical, markets are just not self-fulfilling. If you just think about what that actually means, you'll quickly realize how impossible it is for technical analysis and the market to be self-fulfilling, because of all of the different market participants and all of their different time horizons and objectives and mandates and how they're going to choose to execute on a given thesis. And I wrote an extensive blog post about this years back. I'm going to get the link so that we can drop it. I actually have it. But nevertheless, yes, August is supposed to be a lull. But in the fourth quarter last year, it's the time to buy stocks and nobody wanted to buy them. And the first 2 quarters of this year was the best seasonal time of the entire 4-year cycle, and nobody wanted to buy them. So no, the market is not self-fulfilling. It's not now. It wasn't last year. It wasn't earlier this year. It never will be, for the simple reason that investors have different objectives. They have different time horizons. They're going to execute in different ways. And I've got the list here. I got the chat. Where do I drop this, Spencer?
What's going on
in Slack?
JC, why are we talking? Did Spencer trigger you while I was away? Why are we talking?
Yes,
about
I did. Yes, I did.
Spencer was like, "Oh, it's a self-fulfilling prophecy. The fact that August is a lull." And when I hear self-fulfilling prophecy, I just want to smack you in the face. I'm not going to actually do that because I love you, Spencer, but it makes me feel like smacking you in the face, because you got to think through things like how mathematically, how can it actually be self-fulfilling? So I dropped the link in the chat.
And
to a blog post that I'm
dropping that link in the chat on our website. Wink, wink. Stockmarketmedia.com. If you go there, like literally right on the homepage is where you'll see it.
Priority is figuring out how we can identify where the chat messages are coming from.
I'm working on it.
Yeah. We're on it. Can we do a little hot corner? Because I don't know if this is a typo, but there was a monster transaction.
Oh, not a piker trade?
I mean, it seems like there was a typo there because this is a $170 million transaction. Is that right? Or is that a typo?
Run the bumper.
Run the bumper.
I was too distracted by looking at this Traeger Grills chart. Stock is up 50% today. Anyway, we'll do that after. Too small for you, JC. It's a piker stock. Too small.
Hot corner. So hot right now.
All right. So can you tell me what the heck is going on in this stock right now?
Throw up the table.
CNA? Was that a $175 million transaction, or is that a typo?
Yeah, why not?
It's just a lot of money.
It's they're competing businesses, right? Lowe's Corporation is a large insurer, and they're buying a stake in CNA.
$175 million. No?
Big company. What's the market cap on Lowe's? They're huge.
Wait, how often? Wait, I feel like you never see this. You never see one public company.
What are you talking about? $14 billion company. You never see a public company invest in another public company?
Yeah.
What are you talking about?
Do you? Like,
oh, Berkshire Hathaway's constantly buying
no,
stock.
that Berkshire,
Berkshire,
they're its own thing. I'm talking
are they
about,
not
like,
a public company? Sorry.
that's not what, all right. I guess they're the exception, but
it's a thing. It's
right.
often something like Intel was building, and the only reason I'm talking about these two examples is because they just coincidentally lined up. Intel had built a large position in Mobileye when it was public, 6-7 years ago, and then eventually took it over, and then eventually spun it back out. So, I mean, you're right. You don't see it every day, but of course, they would probably rather buy something in the private market. But it happens, sure.
And what's interesting is they're filing a Form 4, so they were already in.
Yeah.
Right.
Yep.
Why don't you throw up the chart there, slide 1 there for the CNA, so we can kind of get an idea as to what's going on here. So this is an insurance company, CNA, property and casualty.
Slide 1. Sorry.
11 billion.
Yeah. How's the chart look? I didn't even look at it.
Hold on. I'm doing 3 things at once here. Hold on.
Well, go forth.
What's really interesting is the ExxonMobil buy. I want to get there. So Jeff Ubben, is that Value Act? Let me double check. Yeah, so Jeff Ubben, that's Value Act Capital.
So first of all, quickly, there's the CNA.
Yeah.
Not up 2% pre-market here, or as the market's opening up, kind of towards the lower end of its range, but messy, right? Like you wouldn't look at this chart and be like, aha, this is the one I want to buy. I mean, I don't hate it, but it goes from the upper left to the lower right. So not, but financial, insurance, interest rates going up, not the worst place to be.
Wouldn't you rather be in all the, so we were talking about this with the analyst team. In this type of environment, sure, insurance stocks have been the leaders in financials for a few years now, really. But isn't it time to get into the banks and the capital market stocks and the brokers? Like, isn't that where the beta is going to be? If we do see some rotation in the financials, you don't want to be in the insurance companies. That's like buying staples in a bull market.
No, you're right. You're not wrong.
So I really like this Exxon. Let's look at this ExxonMobil.
What happened to Exxon?
I don't know. Somebody was saying in the chat that Bill Ackman was buying Exxon. We did not see that. We saw Jeff Ubben of Value Act Capital buying Exxon in size. They already had a position. But
Hold
look,
on, when was this? I didn't see this on today's Hot Corner.
Go back to the table.
It's not there.
Oh, weird. Oh, yeah. We're up top, JC. Come on.
Up top. Do I have the wrong one? Oh, I must have. I'm on the site itself. It might have. You guys might have updated it. I don't have that. It's not on the site. Got it.
All right, there you go.
Okay.
So yeah, this was the last second edition.
Got it.
So Value Act Capital, right? Great track record. Very, very, successful value investing hedge fund run by Jeff Ubben. Are they looking at the chart here, JC? Are they just buying like a classic retest? I mean, this chart's so clean at 105. What were they buying at, Alfonso? Do we know? I think
my guess, and I don't know, guess is they're looking for energy exposure, and this is the de facto energy ETF.
105, right? 106, 107.
They were buying it right there at those former highs. So, yeah, maybe it's a coincidence, maybe not. You're right, JC. This is the vehicle, right? This is one of the best vehicles. We were asking Todd Stone the other day. Could ask a lot of smart people right now. Which energy stocks do we buy? Buy the big ones, the multinationals, the large integrated players, Exxon, Chevron, Conoco. So I think, this chart is as clean as it gets. We're talking about looking for opportunities in the energy sector. Exxon against 105 is as good as an opportunity gets in energy. And I think
and I love that Exxon is already making new all-time highs, and the XLE has not.
Yeah.
Oil got cut in half. Don't care. Like, that's impressive to me.
It doesn't have to, investing doesn't have to be crazy hard. You don't have to buy the Tidewaters or the Permian Resources or Valaris or Transocean. Like, Chevron and Exxon look great, and they'll pay you a nice yield too. And they're going to be leaders in all the alternative energy stuff in the future too.
And they don't care what tech stocks are doing.
No, you talk about a diversifier. You're not wrong when you say owning stocks doesn't diversify you, but to a degree, owning energy stocks will diversify.
Yeah, I'll give you that. You're right. I'll give you that one. When you're right, you're right, Strazza.
So Ken here says, I'm in rig. They missed on earnings, but wasn't sold off on the news. Look, that to me is a beat. You know, if a company comes up and misses earnings and the market doesn't punish them for it, did they really miss earnings? I don't know.
Right.
Or did the street
And
miss?
first of all, the companies don't miss the earnings. The analysts do.
Right. So the street missed the estimates. They didn't miss their earnings.
Right.
It's all about the reaction, Ken. And Rig looks as good as any of these names right now. I'm very much looking for opportunities in oil field services. And that one's the top of the list. Schlumberger is so clean too right now. Like SLB. I'm surprised you're not all over this, JC.
The old Schlumberger, I'm irresponsibly long Chevron. That's why.
Liquid options market. I mean, this one is right up my alley. This is the industry to be in, at least right now, in energy. I think this thing's ready to pop.
Maybe. Listen, if Schlumberger goes up, I'm making money. Like I'm in Schlumberger indirectly.
I hear you.
Like Chevron is like the catch-all. You know, right?
Chevron's the best. It really is the best.
Is it or is it Exxon?
No, Chevron.
Exxon's bigger.
Look at the relative trend.
Well, I own Chevron, not Exxon, but I'm saying, like, in terms of quality, like, isn't Exxon like the, you know?
Exxon is larger. I think Chevron has been the better operator the past few years.
1 and 2. What's the difference?
It's like Apple, Microsoft.
Right.
It's right. It is. Totally. Yep. And then Conoco's like Google. A little bit down the
Google's
line.
in another sector altogether, for the record.
So then what would it be? What's the next biggest tech stock after the big two? Is it Taiwan Semi?
NVIDIA.
Okay. Yeah.
It might.
But it's a big drop off.
It might
it's
be.
A big drop off.
Taiwan Semi is up there.
Not as big as NVIDIA.
Taiwan Semi is up there. Yeah.
Taiwan Semi is not up there at all, actually. It's
like,
Apple, Microsoft, NVIDIA. I don't even think Taiwan Semi, because it's not even an American stock, so I don't know how they.
That's why it's not in the S&P indexes. But if you're just looking at sheer market cap on U.S. listed stocks, it's up there. It's 500 billion.
On technology, it's Apple and Microsoft, huge components, 22 and 23% of the index.
Yeah, Taiwan's
NVIDIA is number 3, and it drops to 4%. Then Broadcom, Adobe, Cisco, Salesforce. But none of those weightings are relevant at all. It's really Apple and Microsoft.
See what wild relative strength will do to an index construction. Did you just say Broadcom and NVIDIA are 3 and 4 now? Look at the charts. Shouldn't be a shocker.
Broadcom and NVIDIA are 3rd and 4th, and they each represent only 4% of the index, while Apple and Microsoft are 23 and 22%.
You know, you got to know, I love the sector spiders as much as anybody else, but as investing vehicles, a lot of times you could just go buy the biggest stocks that are driving these things and then go kind of, you know.
I know, but Strazza, it depends on what your objectives are overall. By the way, the semiconductor ETF, NVIDIA is the largest at 18%, and Taiwan Semi is 11.5%, just an FYI. But it depends on your mandate, Strazza. Like if you're a financial advisor, we have a lot of our audience is financial advisors. You're not going to buy the stock, you're going to buy the ETF.
So if I said to you right now, semiconductors are going to take out these old highs, right? So new leg higher. How are you going to play it? You got to pick one of the two vehicles. You know, as soon as the breakout happens, you get SMH or equal weight XSD. Like, would you? So I guess the question becomes: would you rather be in SMH, which will be driven by the Nvidias and Avagos, or would you rather be in something equal weight like XSD that gives you, you know, much broader exposure?
As JC steps away, if it were me, I'd go just the SMH.
Did he literally just walk away while I was asking him a question?
Yes, I can confirm. Wait. Let's get the Sox chart up there. Hold on. All right, here we go. So this is what you're talking about just now. Yeah. But my answer to your question, I know you weren't talking to me, but my answer is the SMH. Let the winners ride. Yeah. I still don't understand the logic of owning an equal weight anything. Yep. But that's what I would, or just say screw it and go NVIDIA. You know what I mean? But yeah, no. In all seriousness, SMH is what I would.
I'm with you. I wouldn't argue with that at all, and I would make the same point you just did. Like, yeah, I would if that's my option, SMH or XSD. I want SMH because I want more of the best ones. It's really a momentum strategy. But if I really had the option, I would just buy NVIDIA, Avago, maybe a little AMD. I would mix in. Just build your own basket. When you like an industry, if you're an active trader or investor, you can go build and manage your own basket.
You could. In a few years, custom indexing is going to be a thing for the average investor too.
They've been saying that for 10 years, though.
Oh, have they?
Betterment, like, haven't companies done this and it just hasn't caught on?
They're not going to do it. Investors are too lazy. They're not going to do it. I remember this Motif guy. He was very good at raising money. Nobody cared. Goldman Sachs bought it for $1 zillion. They shut it down.
I remember Motif. No, that's not.
Yeah, I know you remember it. How much did you use it?
I did.
Right. Nobody else did either, Spencer. You're not alone on that.
See, and this is interesting, right? Because it's a good idea. I think it's a great idea. I think it would probably behoove many investors and benefit them to do something like that. But you're right, JC. Like, I didn't do it either. I didn't even look into doing it because I can do it myself in my brokerage account. I don't need to go to some sort of provider to tell me how to kind of pick and choose or
my understanding of custom indexing is you'll be able to say buy the S&P, but I am morally against Meta, so buy S&P but without X Meta.
Well, that's already happening, and my financial advisors have that. I think it's called Canvas, if I'm not mistaken. The Ritholtz guys, I have an account with them, and they do this for me. Hypothetically, let's say I worked at ExxonMobil for the last 20 years, and I own a ton of ExxonMobil stock. They would give me my portfolio ExxonMobil, so I'm not adding to that position. For example, I'm making this up. But you know what I mean? Like, it's cool how they can do that.
Well, it's really cool, and you could also do it yourself. But does this take away from the passive index funds? So is SPY getting less flows? Like, how exactly are they doing that? I know they're not going and buying all 500 stocks in the S&P.
The O'Shaughnessy's built it. Patrick and the O'Shaughnessy's are the ones who built it.
So
theirs.
But he's asking about how it's impacting the flows, and
it's not. The AUM is so minimal. It's not impacting it.
Yeah, but you get what I'm saying? Are they going and buying a basket of 500 stocks just like the ETF manager itself would have to do in a create and redeem process?
I don't know.
It's not making a dent. It's too small, and it's going to be small for the foreseeable future. So it's not going to matter anytime soon.
I don't know.
Just buy the best stocks.
Right, but not. Right. But again, Strazza, it depends on who you are, what you're trying to do. Some investors aren't buying any stocks because it's not part of their mandate. In fact, some of the larger investors aren't buying individual stocks.
So I would be able to go to Canvas and tell them I want to be super overweight coal and fossil fuels, and they would have a sleeve for me.
I'm not sure how it works, but I do know that my tax loss harvesting last year was crazy. How they do that, they'll take a loss in Chevron and then buy Exxon, for example, so that I still have my same allocation, but I'm able to harvest the tax losses.
You've been talking about this for 10 months.
I'm fascinated by the whole thing. It's wild to me how they can do that. It was like $140,000 in tax loss harvesting or something like that. Ridiculous in an account that wasn't even down on the year.
You know you're in good hands when you're having fun with taxes. That's awesome. Love to hear that.
All right.
I remember I'm at dinner. You were there.
Yeah, I know.
Were we at the OBO? And I'm like, Josh, can you explain to me how I did it? And he's like, I don't know, man. Ask your advice. Because Josh is not my advisor. Josh is the CEO of the company.
Well, we got to the compound and you're like, harvesting. Josh is like, no, we literally cannot. That's all you wanted to talk about.
I'm fascinated by it. I still don't know how they're doing it.
I'm falling asleep here. Chart report.
Let's do it. First 1% decline for the S&P 500 in over 2 months. How about that?
Yeah.
Ryan Dietrich. Shout out Ryan Dietrich.
This is chart of the day from Shane Murphy.
Yeah, he's showing what our intern was showing. No big deal. Yeah, scroll down to Ryan Dietrich.
Sure.
First decline of over 1% in over 2 months. This is it. This is the big one. Just showing, 1 year later after something like that happens, market's up. Market's generally up. We know that. So no need to data mine here. Interesting character change here from Frank Cap, friend of the show. By the way, get Frank Capillari back on the show. It's another one that we were saving for Strazza. Strazza's a big Frank Cap fan. I am as well, obviously. Well, I'm a fan of every one of our guests here, but Strazza is particularly fond of Frank Capillari. So definitely bring him on soon. And kind of what Strazza was just talking about on the futures, Frank Cap is talking about it on the S&P cash index here. You know, kind of a little bit of a change. You know, again, for me, it just needs time.
It's a 60-minute chart. Yeah, look at that little gap. So the problem with a lot of these S&P 500 is down 1% stats is if you wake up on the wrong side of the bed on a Wednesday, the S&P 500 is up 90% of the time 12 months later too.
Right. Right. I don't think it's 90, but it's close to 90. It's like 80,
I think it was more just a commentary on how long it's been. But yes, I agree with you.
Listen, Dietrich is like the voice of reason among a like jungle of maniacs on Twitter. I don't know how he does it. He catches a lot of slack for it, but his stats are incredible. And he's been on the right side of the market for as long as I've been following him. So I do love these stats, but I also get some of the criticisms. JC, did you see there was some chatter on Twitter about the stocks versus bonds ratio and why that might be dumb to chart?
I think anybody who said that charting a stocks to bonds ratio is dumb, I think is proving just how dumb they are. Right, we have found that ratio to be so valuable for so many years that just because you don't find value in it doesn't mean that that we don't. We certainly have. And it's worked out very well, for the record. The fact that we follow those, the fact that the S&Ps were making new all-time highs relative to bonds was part of the reason we've been so bullish. Yeah. I mean, not that that was the only chart that had us bullish, but it was definitely part of the conversation.
When people start talking about like, oh, this should be total return this, total return that on Twitter, I kind of just like mute.
Yeah. Well, this is your competition, Strazza. So.
Hey, real quick. Rachel, are you coming to Future Proof? Can I nominate Rachel if and when JC says we have to make the show better before we can get all the cool things that I want, but we'll eventually need like a chat moderator, right? Make sure everyone's behaving in the chat. I nominate Rachel. I mean,
wow, throwing Rachel a job opportunity here. Throwing a mid-show job offer. All right.
I know. Chat mod, that's like a philosophical thing. Do you need one? Do you not need one? I don't know.
It should be self-moderating.
Rachel, I don't know how much you've hung out with Rachel. Rachel's a thinker. She's a thinker.
I know Rachel.
Yeah, she's what do they call these people? They call them intellectuals.
Yeah,
you know?
That's not us. It's not us.
I would consider us intellectuals. You wouldn't like people who think philosophically about things happening around the world. Like you wouldn't put us in the intellectual.
Dude, weighing all of this data and weighing all of this information on a daily basis, yeah, 100%.
I would consider us intellectuals. And Rachel brings a much more psychological dynamic to, you know, she's more academically trained while we are, you know, we've been figuring shit out just along the way about our crazy minds. You know?
Yeah, she's down. This is awesome.
Yeah, she's awesome.
Rachel's down for whatever. Rachel, come to California. Okay, Rachel, meet me for happy hour. Okay. Yeah. Rachel's always down.
It's funny, JC, just hearing, and I knew the story, but hearing Evan tell that story of, well, you showed up to the CMT, you did, you know, a couple little things that I said to do. There's some power in that because we met at a CMT symposium, 6 years ago? I think 2017 it was. And it was the same situation. It was like, okay, hey, Steve, nice to meet you. We went to the same college. That's cool. Go to the CMT symposium. That's where we first met too. So you've been doing this for a long time. This is not like a new thing. This is a proven strategy of yours at this point.
It filters out who's serious and who's not, because I get emails literally every day for a decade plus. I get an email a day, at least one a day, looking for a job. JC, you know, I did this. I am a trader. And you know, I'm like, okay, do this, and then call me when you're done, and I'll tell you what to do next. And then 90% of the time, I never hear from them again because they don't want to do the list of things that I told them to do. Start writing, read these books, take your CMT, go to this conference. And they're like, yeah, I'm not doing that. Okay, fine. Then you don't take this seriously. I'm not going to take you seriously. You obviously did the things that I suggested that you did. Evan clearly did it, except for the Edwards and McGee. I'm very disappointed to hear he hasn't read Edwards and McGee. This is some bullshit. I don't know. This is unacceptable.
So they throw a long list of books at you, you know, if you're going to start studying for technical analysis.
You got to read the Edwards and McGee, man.
We need to get that old book list and have it published somewhere.
I have it. Okay. I did do that.
Is it? It's on the blog?
Yeah.
All right. I got to read
Just
it.
Google all-star charts, technical analysis books. You'll find it.
And it speaks to like, I don't know, whatever. We can get a little philosophical right now about like how we build internally, but it's one thing to be smart or intelligent or knowledgeable about something, but that's like 10% of it, 15% of it, right? You also have to like have the desire and drive to learn and be teachable. That's really more like, JC, you get 1 million emails a day from people who are knowledgeable and smart when it comes to TA. But when you get here, we have 1 million things that we want to teach you. So it's really the, being teachable and flexible and listening to like the advice that you give type stuff that is the difference maker a lot of times.
Let's dig up the book list. I know it's on this. I know it's on the blog somewhere.
We rank best books. And that's what I thought about too when I saw the stocks versus bonds commentary on Twitter. I wanted to be like, go tell John Murphy that then, right? Because like we didn't invent this stuff. Looking at stocks versus bonds, intermarket analysis. This is as textbook as it gets in the CMT curriculum.
Throw up that. I mean, listen. I think you read John Murphy's technical analysis of financial markets. If you're new to this, I would read that one first. If you're already a veteran, you've been doing this for a while, read the Edwards and McGee first, right? But if you're trying to get into technical analysis and you read the Edwards and McGee first, you're going to be like, I don't know how I feel about this technical analysis stuff. But you read all the Jack Schwager books.
That's a lot of books, man.
All the Schwager books. You're right.
All the Schwager books. Brian Shannon, multiple time frames.
Yeah.
Right. Edwards and McGee, John Murphy. Read the John Murphy technical analysis, John Murphy intermarket analysis. That one came out later. That's a good one. What do you got there?
So I'm embarrassed to say I never read this. So I'm going back and reading Bill O'Neill. I'm really enjoying it. How to Make Money in Stocks.
Rest in peace, William O'Neill. Very influential to me.
This is like the Bible of fusion analysis. It's really nice. Great read.
Yeah, I'm all about the P part of the equation. It's that E part that I find incredibly distracting.
Hey, there's something there. I mean,
I don't think so.
It's nice to set a bar, even if the bar is wildly off. It's nice to at least have a bar.
I think it's a distraction.
We've talked about it before. JC actually agrees it's a nice quality filter.
Yeah, there you go.
It's a quality filter.
Yeah, if you want quality in some environments, maybe, but usually it doesn't matter.
Checking basic fundamental metrics, just for like the viability of a company, it's a nice quality filter.
I stand by my answer. It's a complete distraction. I would ignore it altogether.
You don't mean that.
I do mean that. I mean it. Why would I make it up? I mean it from the bottom of my heart. Don't put words in my mouth. I mean it.
I just dropped the link to the blog post of the book list in the YouTube chat. I put the link in the chat on our site, and then I put the link to our site in the YouTube chat. So there's I don't know. You figure it out.
Oh, quick recess. Me and Strazza got to go.
Yeah, I know. Tea time, right? Yeah.
What do you got?
How is Strazza going to beat me by today?
We're not going to keep score. I'm just as bad as you are, dude. I'm not.
I don't think you're as bad as me. You play way more than I do. If you're as bad as me, I'm going to be ripping you apart tomorrow.
I outdrove Riley on like half the holes.
Did you?
I'm very impressed with myself because I'm not good off the tee either. I was getting lucky.
I'm not good off the tee. I'm not good with my irons. I'm a terrible putter. I mean, I'm just a disaster. I'm good at the drinking part and the eating after. MVP.
We're gonna have a great time. What are we eating today? I'm hungry, man. I had McDonald's late night last night.
You said you wanted hot dogs. They got dogs.
Yeah, I'm good with that. I love hot dogs. They're part of like my mojo out there on the golf course. I need 2 hot dogs at the turn. So maybe
then we'll do a little Wagyu beef and a little Cabernet Sauvignon, maybe from France, probably from France. The Bordeaux, little left bank Bordeaux.
It's one thing I know. Whenever we hang out, and Spencer now knows this, if you're hanging out with JC, you're eating and drinking good.
Dude, Spencer, we're sitting in Baltimore and we're having lunch and I'm ordering food. He's like, "You're gonna order all that?" I'm like, "Oh yeah, I'm just getting started."
Well, that was like our third lunch together at that point, but you have to know what you're in for. It's a several-hour affair. Yeah.
Some of the best times. Do you remember when we were in Orlando last year and we went to the that was a Japanese place and we wanted the duck and they didn't have the duck? Oh my gosh.
Okay, real fast. While these guys are out on the golf course, I'll be working. But also yesterday, I took delivery of a not slightly used Peloton. If you want, I didn't buy it. It's not mine. It's my aunt's, but she just dropped it off. She's not using it. She's not using it. If you want to add me,
you're just a custodian.
I'm a custodian of the Peloton.
Got
if you want to add me, I just put my username up. It's SJAYEYE. Like my initials are kind of spelled out SJI. So spelled, Anyway,
so you can get on it, right? So you're getting on, and like, what do you make like your own little username? Like,
yeah, I haven't even used it yet. The wife just used it this morning, but I've never.
You can log in, like at the club, they got a bunch of Pelotons, and you could log in on your user and go into your account. So, I mean, I don't do that. I don't know. I wouldn't know how to do that, but I hear things.
So if you're on Peloton and you want to add me, go for. I've yet to use it. I'll try it out today or tomorrow. I don't even have shoes for it. I don't know. I'll figure it out.
Wear your Crocs. So Spencer's doing some boots on the ground research on Peloton. Let's hear back in a few weeks about this.
A few weeks.
And tell me why it's a short.
Because just getting our account set up took an hour on the phone with them. So
there you go. There's the fundamental research you wanted.
All right, that's it.
How I roll.
That's it. That's a wrap.
Hold on. Is the reason that your aunt gave it to you because the secondary market for these things is so flooded that they're literally not worth anything?
It's because for the last year we've been living in her apartment while she has not been, and so she bought this thing and hasn't used. She's used it to hang her clothes like everyone else, and she's like, just take it. Just
it's a bike that doesn't move with an iPad on it. What a business! What a scam that thing was.
All right. What's it today? Thursday? Chart Request Live. Pat and I, 1:00 today. Smash the like, hit subscribe, tell your friends, email us, call us, do all that good stuff. Guys, have fun golfing.
4.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go